Hi everyone, so this video should help you out with our upcoming test, and then at the end it will have a practice for you on this um, sheet at the bottom. But let's work on J Hill's balance sheet. I suggest you pause the video for a bit so you can read the problem, and then we can do the rough work and then the balance sheet. So now after you have taken a look at the balance sheet and the instructions, we can go ahead and dissect this particular problem. So now you know that this balance sheet is for November 30th 2012, but we have 5 transactions that will change or alter what we have here. So please note that the rough work I will be doing, you can mimic what I will do, or you can choose your own method of working out this particular problem. So let's start with transaction A. Transaction A says Hill bought extra equipment on credit. So if this particular business is buying equipment on credit, two items must change, 2 accounts must change, so we need to identify what those 2 accounts are. And from this transaction we know that equipment will change, and we know that if we are getting the equipment on credit, that means that we did not pay for it. So let us figure out first what will happen to equipment. Equipment, we are buying equipment, so equipment will increase. Okay, so there will be an increase in equipment by $110. Okay, that is the first effect of transaction A. The second effect of transaction A is, if you notice, we did not pay for it, we purchased it on credit, so that means that our accounts payable will increase. Our accounts payable should also go up by 110. We owe more now, right? Because we did not pay for the equipment. That is transaction A right there. Now transaction B also has 2 effects. It says Hill bought extra inventory by check. The easiest thing to do in accounting is, when you have money involved, do that first. So if we're buying inventory by check, that means that our money at the bank will decrease. So we show that by saying that there will be a decrease at the bank, and the amount that we paid for the inventory is $380, so it's going to be minus $380 to show the decrease. So we will have less money at the bank. And then what other account change? Well, we're getting inventory, so that means that our inventory will increase. Now we will have more inventory. Yes, we have less money at the bank, but we have more inventory that we have available for resale, right? So our inventory will increase, and that we show by saying plus 380. Okay, so those are the 2 effects of transaction B: an increase in inventory and a decrease at the bank. Transaction C says Hill paid accounts payable, or also known as creditor, by check. So at this point, again, money is involved, so, and specifically it's a check, so we know it's not cash in hand because it says check, right? So it will be cash at bank. What will happen to cash at bank at this point? Well, if you look at the transaction, it says that we're paying. So if we're paying, that means that again cash at bank will decrease, and it will decrease by 640. Now there must be another effect to this transaction. Okay, so fine, we have less money at the bank, but we owe less. Remember, we're paying accounts payable, so we owe less money now. So it will be, there will be a reduction in accounts payable of $640. Those are the 2 effects of transaction C. Transaction D says accounts receivable, also known as debtors, paid Hill $100 by cash. Okay, so in this case, we are getting paid. We are receiving money from our accounts receivable, and we're getting that in the form of cash. It doesn't say check, so we know that cash in hand will change. How will cash in hand change? Well, it will increase because we are receiving payment, right? So cash in hand will increase by $100. And who made the payment? Accounts receivable. So that means that our accounts receivable, they will owe us less. So this has to decrease. So it will be minus $100. And finally, E. Transaction E says he'll put an extra $1,500 cash in the business. So for this particular transaction, again, there must be two effects, and there is cash involved if you notice. So Hill is bringing in more money into this business. So that means that cash in hand will change. And if cash in hand will change, how will it change? Well, the owner is bringing more money, so the business will have more resources, it will have more cash in hand. So we're going to say that there will be an increase for cash in hand of 1,500. What else will increase? Well, who's bringing in the money? It's the owner. And if the owner is bringing in money, that means that the capital or the owner's equity will be affected. How will it be affected? Well, this particular person has more ownership at this point on this particular business. So we're going to say that there is an increase of 1,500. Okay, so this is the rough work. What you have to do at this point is, depending if you're doing this balance sheet on an Excel sheet or on paper, you need to go ahead, for example, to equipment, you need to say 6,200 plus 110, and you repeat the process for all the other ones which will change. All of the accounts will change except car, right? So for inventory, you will say 8,100 plus 380, and you repeat that process again for all of them. Keep in mind that this balance sheet should balance out at the end, and all of the totals, the balances will change. I will simply go ahead and show you the result of what I have on this balance sheet after I do this rough work. And this is the balance sheet I have. After, of course, after doing all of this working out, this is the final balance sheet that you should have. Okay, notice that I no longer have the rough work here because it's not necessary, and you should not include it. It's not only not necessary, you should not include the rough work here. Okay, keep in mind the rules that you need to indent. You need your brackets, and this balance sheet should balance off at the end. There is a practice for you on this sheet right here which you can do, and the answer is right there as well for you to verify your practice. Good luck on the test.